Hello everyone. So going on with new setups using marker tools. I will cover now the one very old setup called the bouncer. On the bouncer we do the opposite to the EMA. Instead of trading a bounce, we are trading a return to the moving average. On a classic EMA setup, we trade the blue line, we wait for a pullback, and then take this long. This usually works, but on some examples, like for example volatile markets like crude oil, we may have several breakouts, so failed trades, and also this kind of behavior where we need the trade works, but we need a higher than normal stop. So on these examples, the bouncer works better because we trade the other side of the trade. We trade this part. What we trade is the return to the moving average. We are always trading returns to the moving average, where we can or not start another trade. On these examples, the target is the moving average, near the moving average. But the most important is that we need two envelopes, one bigger, one smaller. The big envelope, by the way, the envelopes have the same period than the standard moving average, and it is fixed. It is a fixed envelope. On this example, I am using a 50 moving average and two envelopes, one of 20 ticks, the other of 35. This is just an example. 20 ticks from the moving average to the first line, 35 ticks to the second line. So the bigger line, this one, is a trade ready. So when we are trade ready for a long, we wait to touch the entry line to then enter long, with the suggested target near the moving average. We have another trade ready here, and then an entry from here to here. We are almost touching the line here. If we consider this like a trade ready, then we can enter on this point. So this is the bouncer setup. You can find more info about this setup on my old blogs. Now the point is, how can we trade this setup using the tools included on markers? There are several ways. We need to have a crossover on the outer line and then a crossover on the inner line to have a signal. So one of the most easiest way to trade this setup is having an envelope between the two in the middle. Let's go with that part. I am using standard envelopes. You can use any envelope you wish. If you don't have a standard envelope, you can find several on my website. These envelopes are free. Let's use the copy indicator to copy an envelope, but that is between these two lines, and I will call this line like short, because that will be my short line in red and dotted line And the most important is that on the input data series we must place the indicator line. We must use a number between 20 and 35. The difference is 15. Half of that 15 is 7. 20 plus 7 is 27. And I am looking at the upper line. We'll place this line into the same input data series. So there we have our envelope upper line copied to the short variable. Now we need to check the crossover of the price and this line. If I need the price, then I need the close of the current price. So I need to copy another variable that will be my close. I will use green also on the same panel. This is the close is this line, almost not visible, but the idea is only looking for crossovers of the close and the red dotted line. So now I have my close and the short line. If I use the crossover indicator, and I check my close versus the short line, if I don't use a threshold, then I am having signals each time the price crosses the red line. But I need to add a threshold of the size of the distance between the red line and the green line, which is 7 ticks. So let's add that threshold, 0.07075, that is the half of 15 ticks. And now we have a cross of the upper green line and the cross of the lower green line, which is my entry. I am not interested in the trigger ready, in the short ready, so I don't want the crossover ups. So now I have my short entry signals. Then I have to do the same for the longs. I need the line here, so I will copy let's call it long, go for the envelope indicator, also 27, the middle between the 20 and 35, but this time I am going to copy the lower line. A blue dotted line on the same panel. And now we need to check the cross of the close versus the blue dotted line. use the crossover. My close versus long. I am not using the histogram, but I need to place a different name because my delta is already used here. So this will be my delta 2. Again, if I don't use threshold, I will get a lot of signals. Because I get a signal each time the price crosses the blue line. So let's add the threshold. 0.075, and I don't want the I don't want the signal to the downside. This is the trade ready. I don't want the trade ready signals. So let's remove the crossover down. Not interested in the histogram, so I can maximize this one. And there we have our long signal, exit, long signal, exit. There is no signal here because there is no cross of the lower envelope, but we have a short signal here. So very easy to create. We need to, by the way, I can remove the envelopes and the moving average if you like. I am only using the copy indicator 3 times, one for the red dotted line, upper envelope, another for the this is the price, this is the close of the price, this is the short line, the red dotted envelope, and the red dotted, no, the blue dotted line for my long signals. So I have 3 copies, and then 2 crossovers, the crossover of the close versus the red line and the crossover of the close versus the blue line. I will post several pictures describing how to follow this setup. I hope this be useful for you. If you have any question, please post below this video. Thank you everyone. Bye bye.